Hi, I'm your host, Bob Powell. We're proud to welcome you to the Exceptional Advisor podcast series brought to you by the Investments and Wealth Institute. This series aims to help you to better serve your clients, differentiate yourself from the competition, and enhance your ability to communicate those differences. My guest today is Lilah Raynor, the CEO and founder of Logica Research. Logica Research is the publisher of the Future of Money survey. Welcome to the podcast, Lilah.
Thank you so much for having me.
It's a pleasure. Before we get started, for the benefit of our listeners who may not be familiar with you and your work, do you mind giving us a brief overview?
Of course. Yeah, I'm Lilah Raynor. I'm CEO of Logica Research, and we are a custom insights company focusing on providing insights to organizations to improve people's financial lives. We do research on everything related to the money mindset, how people earn, save, spend, and invest money.
Great. So I understand that the company's been conducting the Future of Money study since 2017. What was the impetus for that study?
Yeah, great question. At the time, we were seeing so many changes in the marketplace around money, particularly in the payment space, and also how people were looking at building wealth, and wanted to be able to understand what consumers were thinking about, how technology was impacting their financial lives, and what kind of help they wanted from organizations and people to improve their financial lives.
Who's included in the study?
Well, we not only have been conducting the study since 2017, but we've been doing the study twice a year. And actually, during COVID, we conducted the study a couple of extra times because so much was going on. And the core sample is a national representative sample of people balanced on age, gender, income, geography. And we also sampled an augment of 200 Gen Zers. So older Gen Zers, those who are now 16 to 25, they were actually just teenagers in 2017 when we started including them. And we do that so that we can look at generational differences and have enough Gen Zers to compare to Millennials and Gen Xers and Boomers, and really understand generational differences and how people are looking at money, and think about that younger generation as helping us understand where the future of money is headed.
Yeah, well, I'm sure we'll talk more about the generational differences in a bit, but you mentioned, or I think I heard you say something about the life cycle of the dollar. What do you mean by that?
What we mean by that is sort of, again, these four prongs. So how people earn money or make money when you think about work and the sources of income that they have. So in 2017, what was, interesting at that time, and still is, so it's changing, is the gig economy and different sources of income. And then how people spend money. There was the onset of P2P payments back in 2017, and the popularity of that was on the rise. And then more recently, buy now, pay later, and how people are using buy now, pay later to manage cash flow. And then saving and investing, which we saw both of those, and just personal finance and money management change a lot during COVID. So thinking about that as the life cycle of the dollar.
Yeah. You mentioned COVID. Can you talk a little bit more about some of the changes that you've seen in the wake of COVID?
Robert, it's been a super interesting and also hard and dynamic time. When COVID hit, we were initially just trying to understand, how are people managing changes in their income? That was really the biggest initial impact, is the impact on people's work and livelihoods and sources of income. And then we saw that was happening. People had decreased in income, but they were also, especially at the higher levels of income and affluence, they were able to save more money. And that had a big impact. And then we saw that savings turn into greater investing. And we've seen a whole new generation of investors born out of COVID. We've also seen COVID shape how really younger generations are entering the financial markets, because they started investing at a much younger age, because they had time, because they had a little extra money, and because the markets were up and there seemed like there was a lot of opportunity people didn't want to miss out on. A lot of impact. And one of the things that I think is going to be interesting to this audience of advisors that you have is a couple of things related to work and money management during COVID. So we all know, about a lot of people changing careers and leaving the workforce during COVID, and we're still seeing that. But we also are seeing that a lot of people want help and advice on how to manage their money, and they're looking to employers to help them, and they're also looking to professionals and financial institutions to help them.
One of the findings from at least the previous wave that you conducted looked at who was seeking financial advice. And if I recall, one of the findings had to do with millennials seeking more advice as well as men.
Yeah, across the board, we've seen that all generations are going to three primary sources for help and advice. And that's financial professionals, that's financial institutions, and that's friends and family. And it's really like a third almost for each of those, but it does vary by generation. And in our most recent wave, we really saw that millennials are really looking to professional advisors more for advice. Millennials are a bit more traditional than the youngest generation of Gen Zers, and millennials are looking to professional advisors and financial institutions. And millennials also want more one-on-one advice than the youngest generation there. So they're more kind of similar to their boomer parents in a way because of that.
What about investment products? What sort of trends are you seeing there?
Well, I think what we're seeing really reflected the market as a whole in terms of opportunity and the bull market, and a lot of people entering investing for the first time and investing more and more experimental in general. That we are seeing that people are investing more in individual equities during COVID, and that actually is still continuing in our most recent wave. We're seeing that there are people who are still investing more due to market volatility as well, specifically in stocks. And then the other investment type that we have seen really on the rise is crypto. And that's across generations, but it's especially true for the younger ones, and it's the most true for millennials.
Yeah. I was surprised, not in the most recent wave, but in the study I have in front of me, one finding was about 1 in 7 Americans own crypto, and almost half are likely to own crypto in the next 5 years. And most affluent Americans currently own crypto and are planning to own it in the next 5 years, to me, which is surprising. I wonder, one, if you could comment on that, and two, how you think that might change given the recent price activity in crypto.
Yeah, well, our most recent study was conducted in April, so in the last month and a half, things have changed even more. But at the time, we were seeing actually, more than half of people expect to own crypto in the next 5 years. And what's interesting, we're also seeing people really being open to being paid in crypto, to wanting to invest in crypto in their 401k, to be able to pay in crypto. So again, that's more true for younger generations. Boomers are not the same at all when it comes to crypto. They're not as engaged or enthusiastic, but millennials are especially. And I think it may come down a bit, but I would say our findings, our quantitative findings and the interviews that we did, is that people, especially millennials and younger generations, are trying to figure out what they should do with crypto. Should they hold on to it? How do they value it in their portfolio? But right now they're not making a lot of changes. They're still trying to figure that out. And more considered investors are really taking a thoughtful approach. And then there are a lot of investors who really don't even know where to go for information, are going to need help. I think for financial advisors, absolutely need to be thinking about how to advise their clients on where crypto fits with their portfolio and what to do with it.
In your survey, you talk to folks who have advisors, but also those who are self-directed investors. And what kind of findings do you see among the self-directed folks that you survey?
Yeah, I mean, one of the things is just that everybody is looking for help. So even self-directed investors are going to be looking for a wide variety of information and help. And maybe they don't have a discretionary amount of money that they're giving over to a financial advisor, but they're going to be pretty resourceful in terms of trying to get the information and advice they need from different sources. And again, I keep talking about younger generations because I think they tell us where we're going in the future. And the youngest generation is really good about looking for great information from different sources. And they are actually more reliant on friends and family as financial advisors think about how to reach those younger investors as they start to have more wealth that needs advice, to be able to reach them where they are on social media, to be able to have YouTube videos that give advice, because that's the first place they go to find information. I think anyone who knows young adults or teenagers has seen how much they rely on YouTube to get information and have this sort of encyclopedic knowledge even sometimes. And so really trying to reach them where they are with messages that are going to resonate with them.
Yeah. If I had to ask my children if there was a book that they would read, it would not be everything I learned in first grade. It would be everything I learned on YouTube.
Yeah, exactly.
So Lilah, do you mean that everyone isn't just tech focused?
I do mean that not everyone is tech focused, actually. And even though we're just talking about the youngest generation and how much they rely on YouTube and reaching them through social media and thinking about how you can reach them with your message online, they are actually really well connected to family and friends. And they also still might go to financial professionals and institutions. It really depends on what aspect of their portfolio you're talking about and what kind of information they need. But especially for millennials and older generations, they really are very much going to financial professionals and institutions for advice, and really try to use a combination of both. You know, millennials want do-it-yourself apps, but they also want one-on-one advice. So they're going to be using both. And I think, you know, you can expect that to continue as well. With the market volatility and inflation that's happening, everybody's going to have more questions. And, you know, we've seen that in other recessions, and that will be true again now, where people are going to need more advice in managing their money given the changes in the marketplace.
Yeah. So our audience, those listening to this podcast, are largely financial advisors. What's the one piece of actionable advice that you might give them, given what you've seen in your research?
Yeah, I would say that people are really open to advice and want it and need it, and really look at how you can reach them with your message. Younger generations are going to be very focused on building relationships with people and brands that they trust. And so coming from a place of expertise and really being genuine about that expertise and authentic is going to help you reach the younger generations. And being able to also be tech savvy so that you have both access to you through technology that works and really great expertise and advice that you can give them one-on-one or through your technology.
Yeah. Before I move on to the next question, one of the findings that sort of struck me was what people want from their financial institutions. And there's a bulleted list of things like decreasing fees and costs, tools to help me build wealth, communication, more advice, as you just mentioned, and delivering better service. Did any of those findings surprise you? Decreasing fees and tools?
No, I think they largely validate what we would expect. I think what is changing now, again, is really thinking about the mix of how you deliver your offer as a financial advisor, and really seeing where you're going to get the most value or provide the most value to your clients by using technology, and where you're going to provide the most value by giving one-on-one or more personal advice.
Yeah. So as we wrap up, I wanted to ask you about a recent study that you did for the Institute that highlights the need for expertise and trust. That's the study you did on marketplace member organizations, including IWI. Care to talk more about that?
Yeah, as financial services companies, it's always been true that trust is important and really foundation to building relationships with clients. And that is more true, I would say, with COVID. And there were a lot of opportunities to build trust in terms of how you communicated through COVID, how you managed, the initial crisis and worked with your clients and helped them sort of think about the markets and their portfolios. And then as COVID continued, to be able to continue to build that trust. What we see is that is still important, increasingly important. And again, people have multiple sources of information, and they are going to look at building a relationship and building trust with those who are communicating clearly with them, communicating in a way that resonates with them, that is accessible to them. And that's just going to continue to be more and more important, especially as the markets fluctuate.
Yeah. Talk a little bit about the use and value of certifications as you think about ways to build trust.
Yeah, absolutely. I mean, I know that Institute provides certifications, and it is something that we've seen over time does help build trust and allow people to understand that you have that credibility and you have that integrity in what you're offering. And again, as we talk to people, that idea of being able to reach them where they are and deliver messages and provide the services that they need from an authentic place, and also being able to demonstrate that you have that expertise through certifications is one way that can help build trust for sure.
So we're recording this podcast in late June. Inflation is rising, interest rates are rising, the market is teetering in bear market territory. When you do the next wave, do you anticipate what kind of findings you might discover and what the actionable advice might be given what you anticipate finding?
Yeah, I think you're asking me to have a crystal ball.
I am.
Which we do try to have. What I would say too, because we have been also researching and talking to financial advisors over the last 25 years or so, and have a lot of respect and appreciation for what financial advisors do. I think really relying on your own experience and delivering the service and advice to help your clients get through the market volatility, that's going to be key, because they are going to be leaning on you more, being proactive in those communications and helping them manage their portfolios.
Yeah. So we've covered a lot of ground. Anything we've missed or anything that just bears reemphasizing before we wrap up?
Well, I have mentioned these younger generations quite a bit, and I know that they don't necessarily have the money today that financial advisors would typically manage, but I would keep an eye out on them, because I do think they're a good indication of what to expect in the future and how to kind of think about strategy for communication and services as well.
Well, Lilah, I want to thank you for sharing your knowledge and wisdom with our listeners. It's greatly appreciated.
All right. Well, Robert, thank you so much.
Thank you for listening to the Exceptional Advisor podcast, brought to you by the Investments and Wealth Institute. If you've enjoyed this podcast, please subscribe through iTunes, Spotify, or our website at www.investmentsandwealth.org/podcast to get the latest episodes of our Exceptional Advisor podcast series. For additional resources, updates on events, and exclusive membership deals, visit www.investmentsandwealth.org.